Hey YouTube, what's going on? Chris here. Hope you guys are having a wonderful Sunday. Wanted to bring you Litecoin on the 1-day chart. What we're going to do here, we're going to step back a little bit and we're going to see what Litecoin has to do to truly get up above this 200-day moving average. Because as you can see, we've been wicking up to it, we've been fighting with it, and I'm going to give you my take on it. So if you guys could like, subscribe, hit that notification bell. Trying for 100 likes on this video. You guys are killing it for me. I think the last Litecoin video got over 200, so I'm just beyond grateful and thankful. And I'll continue to help you the best I can. Remember, guys, I'm not a professional in this. I'm just a guy who's working hard, studying, learning this stuff, and that's why I did this YouTube channel. It's my journey with cryptocurrency and what I've learned and charting and trying to help others. And I want to help others learn from my mistakes and also learn from other people's mistakes. And I want to learn from other people's mistakes. So I can't do this. This channel doesn't exist without you guys. So that's why I want to say thank you. And, you know, I'll always do my best for you. Am I going to be wrong from time to time? Absolutely. Am I going to be right from time to time? I hope so. You know, and if I can bring you guys value, then hit that like button, subscribe, all that. I'm trying to bring you videos basically every day. You know, hopefully some more tutorials, things like that, but the market's been moving pretty good here and there's been stuff to talk about, so we'll do more tutorials when the market's slower, things like that. We'll get into that stuff, but let's dig into Litecoin here, guys. I appreciate you being here with me. Right now we're at $42.71, and what you've seen, we've been in this channel where we've just been working up and down in this channel, and what we've been creating is higher highs and higher lows, which is great. So after we had that massive push down, we came up here, we had a higher high, then back in here, then we came down higher low, higher high, higher low, we moved sideways, higher high, and now, like I said, we were trying to put in that higher low. But what it's looking like is we may have more rejection off this 200-day moving average. Do you see how we're kind of wicking up towards it right here? So from the swing low to the swing high with the Fibonacci, we got to bounce off the 0.236 at $40.84, which is extremely bullish, but we didn't have any follow through with it. Remember, we talked about, we had this like spinning top candle, doji candle down here, and then we had the inverted hammer, but we really didn't have a lot of follow through. There wasn't increasing volume enough that was going to get us up above this 200-day moving average, as well up above this high here and this upper trend line. So we had all this stuff taking place right in here, and in my opinion, we don't have enough juice to get us up above all these things right now and break free to go up here and try to test around $55, $54. What we need to do is come back, see some rejection like we're seeing right here, come back down into this area, guys. This is my sweet spot. You can see where I have alarms so I can start looking at stuff. So that's if you're sleeping or if you're doing anything, you can set these alarms and they'll show you or warn you when the price is getting low or high or whatever, wherever you put these alarms. So they're a great help. But I have it right there on that 20 EMA, and that's kind of the spot I'm really looking at, just to see if we're going to get a bounce to go long. I just still think we could pull back into this area, guys. Maybe test this trend line again. Let this 200-day moving average continue to come down more, and then it's time to face it again. We're going to have to see what we do with this. If we continue to see rejection off it, guys, we could definitely go down and test this bottom level around $22 or go even lower than that. I mean, this is the key marker here. If we can get up above that and close up above the 200-day moving average, that's the long-term moving average, and that would tell us that we're most likely getting into that, it's a switch into that bull market. It's going to be a slow progression, but that's what we have to do. And we're still on the Litecoin on the 1-day chart, we're still holding really strong above the 20 EMA and the 50 moving average, which is down here, which is another indication we may have a bounce off here. Guys may look to go long along this trend line. We could still have more pullback to come. But this is why I talked about with y'all, don't FOMO. There's no reason to FOMO into things. There's always going to be pullbacks. Look, each time people were FOMOing, we had a nice pullback. FOMO, pullback. FOMO, and we still haven't got a huge pullback here, guys. The 0.236, if you're only going to pull back to that, you should have very strong volume coming in and blast off up above that. Because a lot of times you're getting your bounces from the 0.382 to the 0.618. That's kind of the sweet spot. And a lot of people look at that 0.5, like so around $34.40. And that's just traditional textbooks, guys. Like I said, cryptocurrency is completely different. I'm going off what I'm reading in these textbooks about candlestick charting and about patterns and all these things that are based around the stock market, and I'm taking all that knowledge and then applying it to cryptocurrency here, which is a different beast, but there's so many similarities as well. All right, so what we're going to do now, we're going to pull off this Fibonacci, and I'm going to step back even farther for us. All right, and I want you to see this from a distance now. See what we're working with. All right, so here, do you see the lower highs that we've just been creating? And in the macro, guys, this is still a lower high. That's why I'm still nervous. And I said, you know what? Everyone's going, oh, it's the bull market. We're back in the bull market. The bottom's in. Yeah, the bottom could be in. Absolutely, the bottom could be in. But I still think we need to be cautious with it because we have not got above that 200-day moving average with a convincing close, with some follow through and some good volume. It hasn't happened yet. We've still been having these lower highs. And then we were having lower lows, and then that's when we had that switch. Do you see that transition, how we were having lower lows, lower low, just consistently coming in, and then we had that switch, higher low. Then we're having higher lows. Then we're going to see where this lands, a higher low. But it's interesting to see this moving average coming down, and like I said, how we're going to have to fight this. Could we get pushed back down into here, let the moving average swoop down a little bit more, and then we get back up above it? Absolutely. Then we'd come up here and we'd try to test around this $55. So if we do some horizontal lines on this, we'd look, here's going to be some resistance. So once we do get over that, if we do get over that, guys, that's going to be a strong spot. You could even say down around here, around that $48. But it depends on what we're going to be doing here with 200-day. We may already be over top of that. We're going to look at this area here, around that 63. I'm trying to go off the real bodies, guys, best I can, around that 68. So these are going to be your overhead resistance areas. But when you really step back, like we were talking about, and look at this switch, remember, trends change in short term, intermediate term, and then long term. So look at this. Look how long we have been underneath this 200-day moving average, guys. We lost it. We dipped below it and have not came back above it since May. So that's where I'm saying the trend is getting ready to change. It could be. You know, we've had this for so long and they exhaust themselves. You know, the bears run out of steam and then the bulls pick it back up, and then you slowly start working your way back up and trying to break these resistances. And you can see the channel that we're forming here. So if we were to go lower, guys, it would be to test that and see if we put in a double bottom down around that 22. If not, then we could go, you know, $17, $13, all that. Do I think that's going to happen? I don't know. I'm not one to say that I think it's going to happen or not yet. But also with the 20 EMA, do you see that, guys? We're up above it. And for so long, we are seeing rejection on it. So remember this for the next bear market. All right? Take a look at this. And then remember, for bull markets, when you're seriously in it, you want to treat it as support. Look at this. Each time we had a reaction, boom, we got pushed back down, pushed back down. And look at these things, guys. Sometimes we would pop through, but then we'd fall right back through. And now we're actually up above it pretty significantly. So we have to keep that in mind. Like we talked about, is the trend changing? You know, it has on the short term here. We'll see what it's going to do in the intermediate term, but trends are like the river, and that's what you have to realize, is that you want to follow them. So like when we're moving up like this, you're looking to go long until we're proven different, because we're moving up. We're having higher highs and higher lows. So if you were scalping, guys, yeah, you could get in and hit a reaction short. So guys were seeing it up here and saying, all right, this is probably where we're going to start to fall back down, and they open up a short right here and ride it down to the 0.236 and get the heck out of there. They made their profit and they're done with it. They move on to the next one. So, you know, there's a lot of guys doing that too. You see this, we get pushed up here, we have a shooting star candle, and then guys open up their shorts there and we get pushed back down until guys are willing to long off this lower trend line. But I do really like the volume. You know, we couldn't have made it, guys, from 30, whatever we were at, 32, whatever, all the way up to get through that 200-day moving average. That's a big one to break through. We really need to have, you know, higher highs and higher lows and then get through it, pound right through it. You can't just break it in one shot. It usually doesn't happen like that. But now we're getting sandwiched in between the 20 and the 200, and it's going to be decision time. Breaking up, we're going to break down. We're going to treat this as support, or is this going to continue to be resistance? And that's the exciting thing about these markets, guys. They move so fast, and it's it's just awesome to be able to see what's capable in this market. You know, a lot of traders don't take into account that normal markets really don't move like this. You can't see a drop from, let's see, $56 all the way down to $22 in the matter of, let's see, in a month or so. I mean, that's huge. That's massive movements, guys. So we have to take into account that we're very blessed to be in this market, and if we can, you know, learn this market and study this market and understand these things like the 50 moving average and the 20-day EMA and how important the 200-day moving average, and obviously the 100, guys, but I ran out of indicators here, so I'm not able to throw that on. But those are the indicators that you want to get above, and then when we're in the bull market, you want to treat them as support, just like guys were treating them as resistance. You know, and picking out these little waves, guys. Look at this here. I want to show you guys an example. All right, here it is. So we had this big fall. We had a hammer candle, remember, at the bottom, and it came on some decent volume as well. We had a 1 wave, a 2, a 3, 4, and a 5. And then we started to have our fall back down. But if you can start to pick out these little waves and how they work, and guys, that's one, I'm not back testing all that. That may not be perfect or might not be textbook, but I'm just showing you. A lot of guys will predict these things where they're able to, you know, jump in right here once they catch this reaction where we went up and then we had that fall back down. They're taking longs here and they're riding it back up, and then they'll get out there, let it come back down, and maybe hit it one more time. But support and resistance are extremely important, guys. You got to pay attention to them. Trend lines, I can't stress them enough. You know how we talked about it, and moving averages and looking at these candles and volume, RSI, MACD, Bollinger Bands. If you can really study, and Fibonacci, if you can study all those that I've just talked about, you can be a very good trader with just those alone. You don't have to get into the 100 different indicators, because a lot of guys, they're really looking at the RSI, they're looking at the candles, they're looking at the moving average, they're looking at the Fibonacci, they're looking at Elliott wave, and they're paying attention to the volume and the MACD. I mean, those are the main ones people are really looking at. So if we throw on right now, let me get these out of the way. We're going to throw on the Bollinger Bands quick, just see what those are looking like. Remember how we talked about we're looking for those big contractions, those big squeezes, because that'll show that we're going to have a breakout to the upside or a breakout to the downside. All right. So we're still up high. See that? We're up above the middle band, and that's where I said it's coinciding with this 20-day EMA. That's kind of the hot spot, guys. This is the area I'm looking at. So we're going to see. But that's what I want to bring to you all today. I hope you're having a wonderful day. Leave it down low. I'll try to get back to comments today, maybe tomorrow. Got a lot of stuff going on. Been very busy and haven't been able to get a ton of sleep. Kid's been up at night with an ear infection, not feeling the best. So it's just been a tough few nights, and I'm going to continue to do the best I can for you all, but I just don't know how many videos I'm going to be able to get out. Got a lot of stuff happening. So God bless each and every one of you. Take care. God bless each and every one of you.